Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today is Wednesday, March 8th, and Jerome Powell is speaking for his second day on Capitol Hill. He is in front of, I believe, the House of Representatives, whereas yesterday he was in front of the Senate. So, two different bodies of Congress, but more or less going to be the same line of questioning as, although there are more House of Representatives than senators, at the end of the day, they serve their constituents. They're going to grandstand. They're going to get their comments in to look good, to either attack Jerome Powell, support Jerome Powell. But of course, the devil is in the details, as it always is with Jerome Powell. And he's made a few statements that are both dovish and hawkish, but definitely more on the side of hawkishness. He talked about potentially, higher rates for longer, which means extended period of, high period of interest rates, above 5% potentially, which is looking more likely, as well as, just more rate hikes in general. He did say, we were likely to continue for the next, few sessions, which is more or less expected. But, whether it be an additional 25 basis point hike, will we get a 50 basis point hike this month? Those questions are still up in the air. And there's no, real indication from Jerome Powell as to the size of the next rate hike. Now, the one thing he did say is that they're, of course, still data dependent, and that is, giving some leeway to any doves in the market because, right now CPI looks to be coming down next week. If we look at the U.S. economic calendar, we will see CPI print is coming in on the 14th, so 6 days from now, which will be very important. So if CPI comes down, then that would obviously be supportive of, a lesser Fed action, long term, which would obviously be good for the market. Now, the big issue this week is we did have ADP employment, which can definitely differ from the official employment or unemployment report, however you want to look at it, this Friday. But we did get preliminary results of the job market still being strong. Expected was 205K. We got 242K. So, that is a sizable, miss in terms of the data. And typically, if this was if we weren't trying to go into a recession to dampen inflation, this would be a huge win. We're still, sitting at max unemployment. The economy is still looking decently strong from an employment standpoint. But the issue is strong employment numbers may likely lead to higher inflation numbers or more, sticky inflation. So that is, of course, the big concern, and of course, related to what Jerome Powell is talking about. We have also, 10.8 million job openings as opposed to 10.6 million expected. So more job openings and more people being hired than expected is the narrative on the employment side. But if CPI comes down next week in the face of this data, that will certainly be a positive to the market, because the market will likely think or ascertain the opinion that inflation can still come down with max and strong employment numbers. So very much something to consider there, differing sides of the coin. But, the early data is definitely looking rough. But if inflation data is good, then the employment data becomes less of a focus. So looking back at DXY, when we spoke yesterday, we were lifting above the demand zone. We did get all the way up to, close to 106, about 105.8 before coming back down to tag the top of the demand zone, which is 105.5. Now, if we zoom out a little bit to the daily, we can see, a little bit of a Darth Maul forming for today. And of course, it is just above the demand zone. So we could potentially still deviate back into the demand zone and or lower, which would obviously give risk a bit of a likely breathing room. But the pivot point is 105.5. So 105.5 can hold. DXY is still likely to continue higher. If 105.5 fails, then we're, I would consider 105 to be the next level of support. But then you're back in the demand zone, potentially deviating back into this range, which would obviously allow, risk markets to have a little bit more freedom to roam. Whereas, since the beginning of February, DXY has really just been on a kind of a bullish trajectory. So the trend is definitely at risk here for both bulls and bears. So, 105.5 pivot point is a very important focus for anyone moving forward. If we dip lower, probably look for some more longs. If we end up, chugging a little bit higher, probably start looking for some more shorts. Looking at equities, very interesting pattern here. So we dropped like a rock yesterday morning, and interestingly enough, crypto did not drop like a rock. So worth mentioning there. The main point for me is, this low was recently made today. So Tuesday's low is 39.80, which I consider to be a key number for today in terms of a pivot point. So if we can stay above 39.80, then you have, a chance to attack 40.10, potentially higher, maybe re-attack that VWAP, which coincides with the estimated 200 moving average around 40.20. If you get rejected around here at 40.20 or 40.10, you're probably coming back down to 39.80 to just complete this range. Which is nothing that we haven't seen before. And of course, if 39.80 fails, if we confirm a candle close below that, then I would expect us to eventually seep down to 39.50 as low as potentially 39.25. So this whole little area right here should act as, a nice little buy or long zone, considering its importance from trading back in 2022 as well as in January. So that is the current outlook for equities. I obviously don't have a clear read. Jerome Powell is still speaking, so I don't expect any large moves in price until he is done speaking. But of course, if he is, easing up on the hawkish tone, then, maybe we get a little bit of a mean reversion, as they like to say. That would be back to 40.10, 40.20. Maybe that gives crypto a little bit of a jolt. But I will say, having this untapped liquidity down here at 39.40 and 39.25, certainly a little worrisome, and definitely reason to be concerned. I wouldn't be legitimately worried, but I do think longs at this area would be, a decent bet, provided Jerome Powell stops speaking, the market kind of rewrites itself before maybe, piling on some more shorts around the 40.10, 40.20 level, or we just break through. So I'm currently in a bit of a Bitcoin long from the lows, but I'm certainly still paying a lot of attention to equities, as, this is, how many hours, 5, 6 hours of just, this ugly price action. So, and last time we did see price action occur like this, it didn't exactly end well for us, although we did end up tagging that VWAP at one point, which is certainly still plausible. We've certainly made this entire pattern right here seems very similar to what we're looking at right here, which it dropped down and then spiked back up, and then did that. So I think that's very plausible again, but just because it happened once doesn't mean it will happen again. So very much something to consider there. 39.80 is my number. It's hovering around it. Not looking very convincing for longs, but this is where you would play that type of game. So very much something to consider. And we could of course still tag 39.70 and survive, as we want to avoid a close below that recent low, but nothing is set in stone, and that's more or less a guide. But if you want to be more risk averse, if you want to wait, I would wait until this next volatility move, because if it goes down here, I think you've got a good long, and I think if it just automatically snaps back up here, you've probably got another good short, provided that we don't have any crazy bullish news like Nick Timiraos from the Wall Street Journal tweeting that CPI is expected to be really good next week. I think that's like kind of like really good news in the market. But for right now, patience is probably a good virtue to have, although I do have a bit of an idea that we could have a little snapback before we head lower. And I think that maybe my opinion is a bit reflected in Bitcoin as well. So the story goes for here is that we obviously swept to Thursday's lows of last week. So kind of an important number. We know that sweeping that low is good. You could potentially consider this, deviation. if you wanted to. Of course, we have a couple of candle confirms. We're still underneath the VWAP, which that I like to see as confirmation for any trend. So definitely worrisome from that perspective. But the fact that we did have a couple of sweeps down here is very positive. And the next stage I want to see is get above that VWAP, because I think that's when we talk about these kind of stages for trends, often, we talk about support and resistance, which are extremely key. And you could potentially move this resistance up here, although I'm going to keep it where it was, because I just think it's a better mark for traditional resistance. But if you can get above the VWAP, then you can start attacking the estimated 200 moving average, which kind of coincides with the top of this area. You could potentially get it as high as this level. So if you're thinking about, so basically this level and this level is the range. If I kind of move this down, then you'd see, then that's mid-range. But I'm going to keep it where it was just because it's better for the way that I've been trading. But so if you can get above the VWAP, then, this would be your resistance, 22.4, 22.5, retag the VWAP, make it back up to 22.6, maybe 22.7. Also coincides with the low from last Saturday. So, another kind of interesting target there. But, step one, VWAP. Step two is, estimated 200 moving average, or this resistance up here. If you can get above that, then you've kind of got a fair value gap up to 23.3, which would mean, you can get above this level right here. And then you've got a pretty clean potential rise up to this resistance level. And we did mention 23.3 as an important pivot point for Bitcoin. So seeing that, tag that level before moving lower would certainly, scare a lot of bears, motivate a lot of bulls, and would be pretty, what we call a hated movement in the market, because what you're doing is you're ruining all the shorts here. You're stacking in a bunch of longs, getting people excited, and you're crushing basically both sides with one simple movement. So certainly plausible there. But if we zoom out a little bit, the line in the sand is quite clear. It is pretty much 21.8. 21.9, I think, is very critical. But since the low is 21.850, if you get below 21.850, then I would say, confidence in terms of getting to 21.5 or 21.3 would be pretty high. And of course, we are still beneath this 4-hour RSI trend. We have 1, 2, and 3 taps since the start of the week, and we have one or two right here. So I'm just going to call this 2, 3, and 4 kind of real main taps. You could potentially call it 5 or 6 taps, but real core taps are about 4 to 5. So that is still concerning that Bitcoin is struggling to break above this, but equities did break above it at one point, and crypto has still kind of yet to snap back with any equities motion, although there has been lag. I'll just go ahead and draw this to show what happened when equities broke above it. It was this entire movement. So crypto, Bitcoin is very much forming something very similar to this with yet. So if we have 1, 2, 3, 4, 5, 6 taps, and on the 7th it broke, 1, 2, 3, 4, 5, 6, 7. Now we're at, if we count all the taps like that, then, you're starting to get to the area where, maybe, we may see that, the correlation snap back with equities, but it's a tough bet. So, if you are, a range trader, you certainly are attacking longs, around 21.85, around 21.9, hoping to sell around 21.5, potentially 21.6, 22.6, 22.7. And if you are short, then you are hoping that we get back below 21.9, likely 21.85, and then heading lower here. But of course, we do know that Bitcoin loves the pain trade. And, it's not going to be easy either way. And of course, Jerome Powell is still talking for, potentially another 30 to 60 minutes. So with a bit of a hawkish tone. So very much something to consider there. I'm not saying longs are the best move in the world. I'm just saying if you are playing this range, that's what you would take. But, if we kind of zoom out again, the big worry is that you have these lows, you have resistance at 21.3, which was also the low from early February, or I guess mid-February. And that has been, all that liquidity is untapped. So, it does seem likely that we end up seeing this level, but the question begs, do we end up seeing, do we end up seeing above 22.5 before 21.3? And that is the main question. We do know that, Bitcoin loves to scam in this type of environment. It does look quite bearish. Equities don't look, extremely pretty, but they are still holding their level, and so is Bitcoin. So until we get a confirmed break, I think, a long isn't the worst idea with a tight stop near the recent lows. Looking at Ethereum, very little movement from yesterday, but, playing the support level that we lined out at 1535 to perfection. So the moral of the story is basically the same as yesterday. 1600 resistance, 1535 support. This is basically your range that you're trading in. If you can get up to 1600, maybe a chance to break back above, get rejected at 1600, come back to either the lows or mid-range, which is about 1560. And of course, if you break below 1535, then you've got liquidity at 1500 and the lows around 1475 from that early to mid February area where Bitcoin was. So 13th was Ethereum's lows, and 13th was also Bitcoin's lows. So those numbers will be, I think, important for the macro conversation around Bitcoin's momentum. But obviously in the short term, trading towards the end of the week, there is a play here. It's just not the best play in the world. Maybe better to wait to 21.3 if you are thinking that longs are the type of play you want to make. And of course, if you're shorting, you probably wanted to short around 22.1. I would say you're probably getting in a little late to maximize value here, but you could certainly still enter a short and try and keep that stop at the VWAP and try and play it down below 850. So there's definitely something there. You could also maybe take the short, maybe it retags 21,850. But again, I think if you're shorting here, there's not a whole lot of value to be had. The better value is in the long, but it's just momentum certainly continuing to the downside. So the long is a little bit more risky, which makes, if you're not comfortable with either direction, you don't have to take a trade. I'm in a small trade because this is what I do, and the opportunity presented itself, around 21.9. My stop is at entry. So, my risk is, defined, and I won't lose anything if it does head back lower. But, that's why I want everyone to be cautious, because obviously I entered that trade, last night. And we are, dealing with this nonsensical volatility this morning while Jerome Powell is talking. So no, real good, clear read. But there was an indication from the Cleveland Fed, and this is the one kind of thing that makes me start thinking about potential longs, is the fact that the Cleveland Fed is projecting CPI to drop 1% in next week's print, a full percent. I think it's from 6.4% to 5.4%. So if that's the case, the market likely reacts very positively to that, but it doesn't seem that the market is well aware of that. And it seems more focused on the fact of quote unquote higher for longer from Jerome Powell. So, even if inflation is looking good, the fact that Jerome Powell is posturing hawkishly is definitely scaring market participants. So I'm not sure it's best to be a full contrarian yet, but I do think that thinking contrarian thoughts now, it will help you, provided we get good data next week that helps support a more dovish Fed narrative, at least in the for the rest of Q2, because we're going to be moving into Q2 after this month. So very much something to consider there. So just my preliminary thoughts, but we are in a hairy trading environment. So probably the safer bet would be to wait for the highs, which would be, potentially 22.6, all the way to as high as 23.3, or the lows around 21.3 for the large assets. And of course, the 1600 would be for Ethereum, and then the lows, I would say this is going to be pretty strong resistance, and I think this will be pretty strong support as we head into next week. So good luck, happy trading, and see everybody tomorrow.